Oh, I wasn't live for so long, man. I wasn't live for so long. Oh my god. Anyway, we move on. I was reading alone. It's okay, it's okay. Besides that, lending your crypto could generate attractive. Oh, not this. We were reading an article. Forget value versus growth. Pick quality stocks instead, and we'll finish with this one. So let's move on. Basically, the value ETF here did better than the actual Nasdaq, which is high growth tech companies, and we're reading the reasons why. That doesn't do any favors for value stocks. On the other hand, prices of many value stocks are already. Let's check the Buffett indicator too. On the other hand, where are we? On the other hand, prices of many value stocks are already reflecting slower growth, making those shares relatively attractive. The aggregate forward price earning multiple for S&P 500 value stocks is currently about 12 points lower than the index's growth multiple, whereas the difference has averaged closer to 5 points in the past 10 years, according to Credit Suisse data. So the prices of value stocks aren't necessarily reflecting their expected earnings growth as those of growth stocks. One factor is plain to see, though. Value gains likely can't outpace those in growth on the same degree seen early this year. That happens when the economy is in its mid-cycle stage. When economic growth slows after an initial burst of post-recession demand. Consistent with that, the value funds aggregate expected earnings growth for 2022, 7%, is lower than expected 9% for the Nasdaq. So whether value beats growth or vice versa doesn't matter much because the difference will be minimal, which suggests it's time to stop investing around growth or value themes, as they do little to identify useful investment opportunities. That's interesting. What matters is picking individual stocks that can outperform the broader market by a wide margin. Stock picking will be a key to one's success more so than ever, wrote Mike Wilson. That's one thing that Ray Dalio said as well, if I'm not mistaken. Another guy said that as well. No, not Ray Dalio, Peter Lynch, I think. One aspect to consider is quality. The actual stocks can be either value or growth. So basically, we want quality business models, quality companies, quality stocks. The actual stocks can be either value or growth, and in any sector. Let's check if the live is going well. Yeah, it's going well. Quality stocks also. Let's see. The actual stocks can be either value or growth, and in any sector, but they should have competitive businesses that ensure stable earnings growth. Think of Adobe. Think of Tesla. Think of Apple with the services. Think of Google. Let's move on. No matter what the economy is doing, quality stocks also often have strong balance sheets with minimal debt. So when the Federal Reserve raises interest rates, they will be less affected by the higher rates. Already, the iShares MSCI USA Quality Factor ETF has gained 26% this year, beating the value fund's 21% gain and keeping pace with the Nasdaq 100. Another promising type of company is one with strong pricing power. High inflation is raising costs, so companies with the best products and pricing power can maintain strong profit growth. Many on Wall Street, like agriculture and construction equipment, maker DRE, which has recently raised prices 7 to 8% year over year. What is this story? Bond issues with the top ESG rating include consumer brands. ESG is a way for basically rich guys to have more control over companies. Company insiders are back in buying mode, even Tesla's Elon Musk. Let's see, that's interesting. Another problem for Chinese stocks, activists press big investors on human rights. Let's read this article as well. We have like 20 more minutes, so we can probably read every article on here. Company insiders are back in buying mode, even Tesla's Elon Musk. Let's see. The electric car makers stock fell 6%. Elon Musk selling more stock. He sold another 934,000 shares. Let's move on. While they have been on the market factor, Tesla stock has fallen 18% since Musk asked Twitter if he should sell 10%. Okay, when the billionaire who has repeatedly said Tesla is overvalued first starting his selling spree, insider selling was all the rage. According to Insiders Tracking Inc. US, insider sentiment indicator, as investors were pushing the S&P 500 to regular new highs, common insiders were stepping up selling. That has changed over the past month as insider optimism has risen around 15% the daily survey, which monitors insider buying and selling revealed. But it isn't as if Musk is backing the trend. He has exercised option to buy more than 12 million shares in the past month, actually slightly increasing his overall stake. Pfizer boosters approved for older. No, that's another story. So that's all. I thought you would tell us for more companies, man. That's lame. Bitcoin is sitting still at 49.8k. It's stuck there. 49.6k right now. Took a small hit. Binance 565, Cardano 134, XRP 082. Let's check the coins here. Terra $60, Polkadot $28. It was funny because everyone thought Polkadot will hit $100. Avalanche 85, Crypto.com 59 cents. Chainlink 1968, FTX token 40. This is rising though. This is rising. Anyway, bond issues with top ESG ratings include consumer brands and European banks. Of the companies they assessed, 11% are privately held, which are typically not covered by either ESG rating frameworks, mainly serving stock investors. The top-rated bond issuers range across 24 industries, including processed food company Campbell's Soup, consumer goods retailer Procter & Gamble, and networking giant Cisco Systems. While nearly two-thirds of the bond issues with top ESG ratings are US-based companies, EU a more regulatory US-based companies, European commercial banks had a substantial presence. A more stringent regulatory environment in Europe was the main reason. European banks face more restrictions than their counterparts elsewhere and tend to provide a greater amount of information on ESG matters, including who they are providing finance to and what the nature of that financing is. More control. Fixed, okay. Among the 44 bond issuers with 5 leaf ratings, 5 are below investment grade. These are Seagate Technology, Nokia, Knockball, Host Hotels and Resorts, and Iron Mountain. Okay, whatever. Most sustainable bond issuers, let's see. Diageo, Beverages, those banks, Lloyds Banking. Let's move on. Anyway, let's see. These stories are big, I think, but we'll read them anyway. Lending your crypto could generate attractive yields, but how safe is it? Do we have a video here? I would like to listen to something. No, we don't have. Gold is a surprisingly green investment. No one cares about gold as a green investment. Let's read this. If you owe some Bitcoin, you may be tempted to hold on and hope for the best. That may take a while, since Bitcoin and other cryptocurrencies have slipped into a bear market. Oh my god, they're still calling for a bear market. What the fuck is this? Bitcoin has corrections of 20, 30, and 40% all the time. That doesn't mean it's in a bear market. Bitcoin is off more than 28% from its record high. But some owners of cryptos aren't just banking on high price. I believe after Wednesday, after things clear out, we will see bigger moves from crypto. That's what I believe. But some owners of cryptos aren't just banking on higher prices. They are acting like bankers themselves, handing their holdings to lending companies and pocketing interest on loans. Lending Bitcoin can generate annualized yields from 3 to 8%. Yields on smaller altcoins reach double-digit rates. And stablecoins, like USD coin designed to maintain a fixed value of $1, may earn 10% or more. We give the yield we generate, by the way, on KuCoin. You can earn like 17, 19, 20% from stablecoins. The problem is the risk that you take. We give the yield we generate back to our customers who gave us the assets, said Alex Masinki, CEO of Celsius. One of the largest lenders with 28.6 million. Who is that guy? Darren Fonta. Darren Fonta joined Barnes. Okay. He has covered financial markets for more than 50 years. Okay. And let's follow her. I think she's a woman, maybe. Let's follow her and see if she lives up to our standards, to our high standards, man. And let's move on. Okay, we give, one of the largest lenders with 28.6 billion in assets and 1.5 million clients. Just like you can borrow against Apple or Google stock, you can borrow against your Bitcoin, he adds. Yet investors are getting a free lunch. Along with the risk of lending assets that could plummet overnight, there is an array of company-specific and market dangers. Regulators are cycling too, ordering some lending services to shut down in certain states. A lot of this money is A lot of this is money chasing itself around on the blockchain, says Paul Brody, head of EY Global's blockchain practice. If the market crashes and doesn't quickly recover, he adds, it could have a cascading effect as borrowers default. Lending digital assets is turning into a big business. Companies such as Celsius, BlockFi now manage billions of dollars each in crypto. Genesis, an institutional lender, and I have noticed, I have been using Celsius, and by the way, if you want to get $50 in absolutely free Bitcoin and even more free crypto, you can check the link of Celsius, chalikis.com/Celsius, and it will get you to sign up to Celsius. From there, after you transfer in your funds, you will get $50 of free crypto or free Bitcoin and more crypto. I really like Celsius, by the way. I have some of my Bitcoin there. Genesis, an institutional lender and prime broker owned by Digital Currency Group, originated 35.7% billion of crypto loans in the third quarter, up 586% year over year. Nexo, another lender, says it has 12.3 billion in assets and has paid out 200 million in interest. Like banks and brokerage firms, crypto lenders offer interest-bearing accounts, collateralized loans, credit cards, and other services, and they are competing aggressively for capital, pitching bonuses and token rewards. Borrow 1,000 against 10,000 in Bitcoin on lending platform Abra, and you would receive $5 worth of a token called CPRX. BlockFi now has a co-branded credit card with Visa, including 1% back in Bitcoin. That's great. I like that, the 1% back in Bitcoin in all purchases. I wish I had access to BlockFi. In Europe, though, we don't have access to BlockFi yet. Celsius and Nexo bump up yields with their proprietary tokens. Investors also earn yields on crypto through exchanges and decentralized finance on DeFi networks. More than 260 billion worth of crypto is now locked into smart contracts on DeFi platforms, according to DeFi Llama. That's nice. That's showing that we're growing. Why are yields so high? The answer is a mix. Actually, one thing I wanted to check is Data Aroma. It's a nice site. And besides that, the Buffett indicator, as I said earlier, look at that. That is a Buffett indicator. It shows the market value versus the GDP. And what we see is that it's extremely overvalued in historical terms. Look at that. In 2000, we were at 150%. Right now, we're at 200%. It's insane. It's insane. Insanely insane. Anyway, that's probably all the printing, man. Anyway, let's check the site and let's move on with the article. Why are yields so high? The answer is a mix of risk, market inefficiencies, and high demand for borrowing cryptos and stablecoins. The model for lending is similar to that of a traditional brokerage. Crypto lenders offer collateralized loans backed by the securities of clients. Capital for loans comes from the holdings of their clients, and they receive a share of the interest paid. After the loan broker take a cut, investors can usually withdraw their assets at will, though it may take a few days. Interest is paid. It usually takes, if you have small amounts you want to withdraw, it usually takes, it's instant on Celsius. I use Celsius, as I said earlier, and you can sign up using my link below in the description. But if you take higher amounts, if you try to withdraw higher amounts, then it takes more than 1 day, just so you know. Let's see, interest is paid in a crypto or stablecoin and may adjust frequently based on market demands. Most lenders, that's a nice article by the way, I like this. Most lenders offer tiered rates, pitching higher yields on smaller amounts. At BlockFi, Bitcoin earned 4.5% on 0.1% Bitcoin and 1% on 0.1 to 0.35% Bitcoin. Okay, Celsius yields more, offering 6.2% on 0.25 Bitcoin and 3% above that at current rates. Stablecoins often yield 10% on many platforms. Lenders pump up the yields with reward tokens and other bonuses. And stablecoins are in demand for trading, market making, and liquidity. Moreover, crypto owners can use Bitcoin as collateral for a stablecoin loan, leveraging gains in the asset without selling it. If you give me Bitcoin as collateral, I can only lend you a stablecoin, says Masinski. Okay, high yielding cryptos. Crypto lending yields are relatively high and vary by the broker and the coin. Celsius has the best yields right now. Ethereum 3.25%. Okay. Another reason that yields are high. Traders can capitalize on wide pricing discrepancies. Crypto markets are inefficient and decentralized, creating opportunities for hedge funds, exchanges, market makers, and other firms to profit off high bid-ask spreads between buyers and sellers. There is a lot of money in market making, says Zach Payne, CEO of BlockFi, but you need inventory to make markets. If you don't want to buy Bitcoin outright, you borrow it. How safe is crypto lending? The companies say they use rigorous risk controls and impose steep collateral requirements. I hope this doesn't turn out to like 2007 and 2008 with the bonds. Up to 200% of a loan's value for highly volatile cryptos. Loans may be liquidated automatically if prices fall below certain levels, and loan brokers may issue margin calls, requiring borrowers to store up collateral. These companies have an interest in their business model working, and that requires good protections for customers, says Daniel Davis, an attorney for crypto companies with law firm Karen Munson Rosenman. Still, investors shouldn't account on government protections against losses. FDIC bank insurance or SIPC brokerage insurance isn't available in crypto. The industry isn't regulated as closely as banks or brokerages, and while lenders may be conservative with loan-to-value ratios and capital reserves, they may take liberties. Both Celsius and BlockFi, for instance, say in their risk disclosure that they may pledge, repledge, hypothecate, rehypothecate, sell, lend, or otherwise use any amount of digital assets at their discretion. Hypothecating is pledging collateral for a loan. Rehypothecating means repackaging collateral into another loan. It's insane what they are doing there, by the way. Those practices have frequently landed Wall Street in trouble when counterparties like hedge funds crashed. Crypto, that's extremely risky. The more I hear about it, and the more. That's a nice article, by the way. Let me share that on my Discord. And by the way, if you want to see my buy and sell alerts, feel free to join my Patreon down in this description link below. And by supporting me, you get access to my Discord, and it's nice there. It's nice. Let's go to favorite articles and let's leave it here. We already have two guys here, and you can join anytime you want by supporting the channel. Both Celsius and BlockFi, okay, whatever. Crypto goes through a stress event at least once a year, and we come out clean, says Masinski. The regulators looked into us and said these guys know what they're doing, he adds. Okay. BlockFi referred Barron's to its risk disclosure statement. Yet the crypto market isn't trivial anymore. It's worth 2.3 trillion overall. Leverage is built up through futures and other derivatives. Stresses or selling pressure in one area could ripple into others. Leveraged borrowers facing margin calls or forced liquidations may have to shore up. By the way, that's one of the reasons Bitcoin crashed like 1 to 2 to 3 weeks ago. That's one of the reasons. Because there was a lot of leverage in the market, margin, and etc. And then liquidations came when the price fell below a certain point. Stresses or selling pressures in one area could ripple into others. Leveraged borrowers facing margin calls or forced liquidations may have to shore up collateral if they can afford it, or abandon their positions if they can, defaulting on their loans. These lending platforms are designed to withstand a significant amount of volatility, but if the entire market declined by more than 30%, it could trigger a cascade of redemptions and challenges, says Brody. The crypto loan market is also opaque. A batch of assets could be relaunched several times, and that's scary. That's scary. I saw one video of TechLead the other day when he took a loan on the same assets like 10 times or more. It was extremely funny seeing that. And if one, but at the same time risky. Anyway, the crypto loan market is also opaque. A batch of assets would be relaunched several times, and if one in the middle defaults. By the way, we're running out of time, so we'll finish this article and close the stream. Okay, the crypto loan market is also opaque. A batch of assets could be relaunched several times, and if one of the middle defaults, the original lender may need to be repaid from the company's capital buffers, assuming they are first in line. Wall Street made a fortune by selling and bundling collateralized loans before the enterprise collapsed in the mortgage crisis. There are similar risks in this, says Brady. Regulators have taken notice. The SEC threatened to sue Coinbase Global if it launches a lending platform, prompting Coinbase to cancel its launch. Financial regulators in states such as Alabama, Kentucky, New Jersey, and Texas have launched inquiries or cease and desist orders to Celsius and BlockFi. New York recently ordered 2 lenders to shut down, including Nexo, and sought information from 3 others. Three companies. So they are not. There is no free lunch, by the way, for these companies. They will have to go through many hoops if they want to keep their companies going, and will have to go through them together. The companies argue that their products don't violate securities rules, and they are contesting the shutdown orders. Nexus says it wasn't offering a lending product in New York and points out that its finances are audited, including publicly available data on its reserves. We have three law firms giving us opinions that everything we do is compliant and legal everywhere we operate, says Masinski. BlockFi says that it believes its products are services are lawful. Abra CEO, I don't know about Abra though, I don't know this app at all. Abra CEO says the company digs very deep into risk management. Accounts are managed by Prime Trust, a crypto trust company. Loans are highly collateralized, he adds, and Abra holds enough reserves to meet withdrawal requests, typically within one business day. Still, he cautions crypto lending isn't for everyone. Bitcoin and Ether aren't going away, but if you are holding, or if you are a holder of altcoins, you could lose all your money, he says. Go in with your wide opens, not the illusions of grandeur. I mean, that's one of the best articles you've read here on Barnes. Let me save that. Anyway, besides that, let's just check this site. Top 10 stocks, top 10 most owned stocks. We have here Visa, FB, and Google. And top 10 stocks by percentage. We have Google the highest place. Why so many people love Micron technology, man? Berkshire, Apple, Bank of America. What's the price of Micron technology right now? I wonder. Top 10 buys last quarter. Alibaba is first, so people are buying Alibaba. Intel, Alphabet, nice. That's nice. Let's see, Alibaba, Viacom, CBS, last 2 quarters. Okay, Alibaba makes use both of those lists. Top 10 buys last 2 quarters and top 10 buys last quarter. Anyway, thank you for watching today's live stream, boys. I hope you enjoyed it, and I'll see you on the next one. Bye for now, and I hope you have a great day.